Hi everyone, Captain Damien Jeanette with the Swap and Negotiating Committee and Economic and Financial Analysis Committee. Here are your third quarter 2021 financial results for Southwest Airlines. Our fleet consists of 737 aircraft at the end of the quarter. We currently have 24 NG aircraft in temporary storage and no MAX aircraft parked as of today, making our active aircraft count 713 aircraft. For the third quarter, SWAPA pilots flew 29 million passengers. That's up 152% from last year and down only 4.2 million or 12% from the third quarter of 2019. So in terms of revenue passengers carried, we are almost to 2019 levels. Revenues for the quarter were $4.6 billion, which is only 17% under third quarter 2019 levels. Here's something to keep in mind when comparing to 2019. Southwest Airlines reports three revenue areas: passenger revenue, freight revenue, and other revenue. We actually made more money in freight and other revenue this quarter than third quarter of 2019. Passenger revenue was lower due to slightly lower passengers carried, but also average ticket fares this quarter was down 7.5%. At 2019 fare levels, we could have exceeded 2019 revenues for the quarter. At SWAPA, we look at the adjusted operating income and loss first. This measures how the core business actually did. This excludes one-time special items such as fuel hedge gains or losses, payroll support plan monies, and is before interest and taxes. So after having operating revenues of $4.6 billion and adjusted operating expenses of $4.7 billion, we had a loss for the quarter of only $59 million. On a percent of revenue basis, that's an adjusted operating margin of negative 1.2%. Not wonderful, but that means we're on the edge of making money on our own without any PSP support. If we take into account PSP monies and those fuel hedge gains and losses on a GAAP accounting basis, you can see we made a core profit of $733 million or percent of revenue of 15.6%. After this core profit of $733 million, you subtract interest and expense and arrive at a pre-tax earnings. This is important because pre-tax earnings is the basis for the profit sharing calculations. So how did we do in profit sharing? We accrued $77 million in profit sharing for the quarter. That means our accrued profit sharing for the year is $186 million. So now the big question is, what does fourth quarter have to look like in order to get profit sharing? The profit sharing plan document states that we must have a positive operating profit for the year. So that means we could have a negative quarter and still get profit sharing. So far for the year, the 3 quarters, we've had $1.248 billion in pre-tax earnings. So we'd need to have at least that much of a loss in fourth quarter in order to wipe out all profit sharing accruals. Turning to liquidity, Southwest is still in a very cash strong position. We have $16 billion in unrestricted cash, $11.2 billion in long-term debts, which means our net cash position is $4.7 billion. If we had more debt than cash, it would be a net debt position. Remember, during the pandemic, we were the only airline to be in a net cash or more cash than debt position. Our current leverage, or adjusted debt to invested capital, is 56%. We remain the only U.S. airline with an investment-grade credit rating. Per the Carriage Restrictions, Southwest Airlines has not repurchased any shares nor have they paid any dividends. During the last round of PSP funding, the terms restricted both share buybacks and dividend payments until the end of September 2022. Executive compensation is restricted until April of 2023. That wraps up your third quarter financial results. Thanks for watching. This is Captain Damien Jeanette signing off.